I'm Taylor Riggs in San Francisco. This is Bloomberg Technology. Coming up in the next hour, click fate. Google's parent company Alphabet says its paid clicks are up 18% in the third quarter, but still below estimates. We have complete analysis of the search engine's earnings, including comments from CFO Ruth Porat. Plus, Jedi mind trick. Microsoft lands the $10 billion Pentagon cloud computing contract, edging out competitor Amazon. Shares hit a record, but some Microsoft workers are not celebrating. And to infinity and beyond, Richard Branson's Virgin Galactic Holdings becomes the first space tourism business to go public. We'll examine demand as shares begin trading. But first, our top story. So Alphabet shares slumped in late trading after reporting third quarter earnings. The report was impacted by heavy investment in Google's cloud computing business, which is trying to catch up with rivals like Amazon and Microsoft. Google has been building data centers, buying equipment, and hiring salespeople to support its cloud unit, which runs computing power and software services over the internet. To discuss, I'm joined by eMarketer analyst Nicole Perrin, and also with me, Jitendra Worrell of Bloomberg Intelligence. So let me start with you. Cloud is all the rage, potentially future growth for the company. What did you make of the cloud business this quarter?
You know, just like you said, they are spending in ramping up cloud, but it's showing results. So 39% in the segment that they house cloud, it's pretty strong. Probably cloud is growing much faster than that. And what we are seeing over here is, you know, for the next really year, cloud is going to take center focus as they push into enterprise, and they are getting some early success over here, and they have the capacity to compete with Amazon and Microsoft. So you're going to see cloud becoming a bigger and bigger deal for Google, but it'll come at a cost as they scale that business, and that's what you're largely seeing in the cloud business.
And Nicole, what is your take on the cost of keeping up and gaining market share in that cloud business?
Well, it is going to take some continued investment, as we just said, but I think there is the potential for a huge payoff on that side, and we have seen some major contracts awarded to competitors recently, so I expect Google to keep investing in the hopes of winning some of that business in future.
I want to talk, Jitendra, about the income statement because it seems like a broad-based miss. You know, top-line revenue comes in line, but operating income, margins, and then the bottom line seem to be a miss all in a row. Is it a revenue problem or an expense problem?
It's not a revenue problem. I mean, if you look at their core ad business, there's a dynamic where the ad pricing is improving. You know, I mean, we see a search becoming more and more valuable on mobile as it gets crowded with the space. So there's some impact that you will see in terms of improving ad pricing because of that, and that's offsetting the 18% increase in paid clicks, the volume of ads, if you may, that you're seeing. So this dynamic will keep playing. I think the ad business will keep humming well, but the cloud business is where disclosure could be a bigger deal for them next year, because at scale it is a very profitable business, as we have seen with other competitors, and Google has the scale. And if they can come out and show that disclosure to the street, like, look, this is how fast we are growing vis-a-vis others, and this is the profitability, which it could very well happen next year. You know, it could spur a re-rating for the company.
You know, Nicole, I just got off the phone with the CFO, Ruth Porat, and she said it was a very noisy quarter, which broadly led to the miss in the margins and the bottom line. On the expense side, there was a one-time legal expense that they had to pay for, but there was also an unrealized gain or loss, which had to do with some accounting changes and how you now have to mark to market some of those unrealized losses on your income statement. Namely, we think it's Uber and Slack. She wouldn't specifically clarify that those were the companies, but is there a real impact that the venture capital arms of these companies can really start to hit the income statement and lead to some bottom line misses relative to where you think they should be?
I think that is possible. I mean, I think for me, my biggest takeaway from Google, we do focus really heavily on the ad side, and they beat investor expectations as well as our expectations for their gross ad revenues. And we see, although CPCs are continuing to decline a little bit, overall paid clicks are way up, as we said. Additionally, traffic acquisition costs have continued to stabilize, and that was something that had investors worried. They peaked earlier this year. They've dropped slightly since then, so I think that's a really good sign for the bottom line on their ad business.
Jitendra, so we've talked a lot about the ad business. Last week, we sat here and we said the same thing about Amazon, that ad business is so strong for that company. It's a lever that they can pull. How mature is Google and Alphabet's ad business, or are there still some more levers that they can pull?
Well, mobile search still has room to grow. They are still trailing peers in terms of concentration of revenues coming from that. And as the results show, it continues to be a very valuable franchise for the company, and they are the market share leaders. So we expect the momentum to continue there. But with Amazon and Google side by side, they're switching roles where advertising will come at the forefront for Amazon going forward as a cloud business, faces a lot of large numbers, while Google is going to start showing more results on the cloud front. So you're going to see this dynamic play out, which really plays well for both companies. I mean, that the market is growing at a very healthy clip. There is enough room for the three of them to enjoy good growth. But disclosure on both companies, advertising on Amazon and potentially cloud on Google, is what could make it more exciting.
And quickly, Jitendra, you had a good note on this, that ad revenue had accelerated in 2018. You had a little bit of a slowdown or a moderating of that pace in 2019. Did this quarter give you enough to see sort of a reacceleration of ad revenue, or are there still some pockets of worry, let's say?
For Google, I think the dynamic of ad pricing improving to offset any slowdown that we see in paid click growth in general would continue because they're market share leaders, because search is in many ways a mature business, but there's enough room in the mobile side to keep that business humming at a healthy clip. But cloud will take over the center stage.
Nicole, I mentioned that we'd spoken with the CFO, Ruth Porat, earlier. I want to bring up a quote when I asked her specifically about YouTube. There is arguably, outside the cloud, YouTube could be a big future growth area for the company, and she did reiterate that there, saying that we continue to deliver growth. We're excited about the upside potential. Brand advertising is growing at a healthy pace. Are you getting enough of an outlook going forward into the next few quarters as it relates to YouTube to make you confident that that can continue to be a driver?
I do think that YouTube will continue to be a driver. We certainly haven't seen anything that suggests otherwise. Advertisers are very keen to spend on video placements. They'd love to have more video inventory, especially video inventory where they can target at scale, and YouTube is the absolute #1 place to do that.
But Jitendra, there's been a lot of controversy sometimes about YouTube. Are they doing a quick enough job of pulling down content? There's a broader concern about data privacy and misinformation. What's the downside risk here with YouTube?
Well, the downside risk really is more on the profitability side of the things. Like we just said, that the momentum in advertising will continue to be strong. But because it's shared infrastructure, search is sharing infrastructure, YouTube is sharing infrastructure, cloud is sharing infrastructure. So if you sort of look at their cost profile individually, I mean, search would be significantly more profitable, and that sort of helps them, keep YouTube humming at a good clip on a top line basis. So I think YouTube will keep helping the top line, but as far as disclosure is concerned, we don't think YouTube numbers would be disclosed anytime soon. It'll be hard to see that, but cloud, there's a real potential.
And Nicole, finally, we look at segments and geographic, and we know that Google is also sort of in the midst, as all big tech is, with the trade fight in China. I spoke with the CFO, and she's continuing to highlight that all regional and geographic areas are looking for growth, not commenting specifically on any of the trade fights or operations in China. What do you make about any big headwinds as it comes to the macro environment, specifically around China and the trade fight?
Well, I think overall, Google's biggest international headwinds tend to have to do with currency fluctuations. As far as China, they're not super invested in there, so I think any trade war issues with China may affect them much less than lots of other sectors here in the U.S., like manufacturing.
Nicole Perrin, a V-marketer, and Jitendra Worrell of Bloomberg Intelligence. Thank you both for joining. Now, investors sank their teeth into Beyond Meat earnings after the bell Monday. The fake meat maker beat analyst estimates on net revenue, coming in at $92 million, and the company raised their full-year revenue outlook. New distribution channels were also key to growth. Beyond Meat also posted its first profit since going public. And still ahead, it is a big win for Microsoft in the cloud, but is it completely over? How Amazon could be challenging the decision. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Microsoft shares rose to a record on Monday after the company scored a major victory in securing a milestone. It was a $10 billion Pentagon contract for cloud computing services. But the contract, unthinkable for Microsoft even a year ago, will likely come at a cost, both legal and internal. Bloomberg has learned that Amazon is considering a challenge to the award of the contract to Microsoft's much smaller Azure business, citing President Donald Trump's interference in the bidding process. Amazon had been widely considered the frontrunner because of its superior size and previous cloud contract with the Central Intelligence Agency. To discuss, I'm joined by Bloomberg's Naomi Nix, who has been covering the story for us, and also with us, Bloomberg's Dina Bass, who covers Microsoft. So Dina, let me start with you. Amazon was originally seen as a big frontrunner. How did Microsoft do this?
We're all still trying to figure out to what extent it was the involvement of President Donald Trump and to what extent it was Microsoft's own bid. Now, over the last couple of years, Microsoft has really been improving its cloud offerings, particularly with a focus on government. They've gotten additional security clearances. They've built additional data centers that were appropriate to what the government needed. And overall, globally, they've been expanding their data center footprint and winning more and more large customers. They also have a long history of government contract business. You obviously mentioned the CIA contract that AWS has, but Microsoft's worked with the U.S. federal government for a long time and is very experienced in putting in the kind of bid that's generally been successful.
And Naomi, from your perspective, from the Pentagon, from the D.C. angle, what was the advantage of Microsoft over Amazon?
Well, I think to Dina's point, Microsoft has been a long-time contractor with the DoD. The DoD uses Microsoft products currently in its Office suite. And so there probably was some synergy there in terms of, Microsoft's ability to say, hey, we know how the DoD works. We know how to put together a government contract that's going to be beneficial to public sector clients. And we have the technical capabilities to meet the demands that you're looking for.
Naomi, you bring up an interesting point. I wonder if it's healthy to have competition, Amazon with the CIA, Microsoft with the DoD, or is it better for synergies to have the same company? What is the perspective from D.C.?
Security officials in D.C. have been really divided on that question, and actually the answer has been quite controversial. People in industry have said, look, we think the DoD and other public sector agencies should be not putting all their eggs in one basket, and they should be using multiple cloud providers. And the DoD has tried to allay concerns that they'll be sort of only relying on the Jedi winner for their cloud computing services and saying, hey, we do have a few other smaller cloud contracts out there that could go to other companies. And then you have others within the DoD who say, look, the DoD systems are really complicated, they're decentralized, and it would be much easier for us to have the same cloud infrastructure to move our data around.
Dina, what does an Amazon challenge look like?
So Amazon has 10 days to decide whether to protest, and then the GAO has 100 days to respond to it. They could also file a lawsuit. We'll have to see if that would be successful, or there may be some sort of possibility, like Naomi mentions, of whether there's some push to make this deal more multi-cloud, which is generally speaking what corporate customers do. They have one cloud that they rely on more, but they're increasingly moving away from having just the one. There are certainly some people in Congress who would prefer to see more than one here as well.
And Naomi, to be fair, the Government Accountability Office, I believe, came out and said that this deal and the approval process had gone through all the appropriate controls. So they're certainly coming out and saying that if Amazon were to challenge, they're confident that they have raised the bar high enough to pass any sort of challenge that does come their way. But what else are they saying about what a challenge could look like and if all of the controls really were met?
Well, the GAO has previously ruled on protests from Oracle challenging the fairness of the contract, and Oracle had alleged that there were conflicts of interest that gave Amazon the edge in the contract. The GAO hasn't said anything about any claims that Amazon might make in regard to the fairness of the Jedi Cloud contract. Within the DoD, there has been an inspector general who's been looking into the contract, and they recently came out with, a statement that essentially said, hey, we don't think there's anything that we have found thus far that looks like the DoD shouldn't go forward with making an award. But we're still awaiting the final results of the inspector general's review.
And Dina, not only is Microsoft facing some of the external pressure, but internal pressure. What are some of the employees internally protesting?
Sure. On the eve of Microsoft putting in their bid for this contract, an employee group posted an anonymous letter asking the company not to bid. That same group continues to oppose the contract. They are upset that Microsoft's participating in it. They think that it amounts to Microsoft helping the government improve the lethality of its weapons systems, and they don't want to be part of that. Now, we're waiting to see if they take it further than just, tweets, whether there's anything internally, a petition, a walkout, something like that. But, thus far, the company's responded to these employees by saying, look, we, Microsoft, believe that we should be supporting and supplying the U.S. government and the U.S. military. The company said they respect the fact that some employees may feel differently and told those employees that they should, if they feel uncomfortable, seek to work on other projects. But we're talking about Microsoft's biggest cloud businesses here. The Pentagon has another contract that will go out for bid soon, for which Microsoft's Office Cloud is going to be considered. It becomes harder and harder at Microsoft to find jobs that aren't in some way tied into these contracts. They're, the majority of the work and the products the company is working on right now.
Bloomberg's Naomi Nix and Dina Bass, thank you both for joining. And coming up, it's music to investors' ears. Spotify surges the most since 2018. It is their debut on Profit and paid users. We have the story next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. So Apple has announced noise cancellation AirPods. The updated new accessory, it's called the AirPods Pro, will be released October 30th. Each white earbud will ship with 3 different sizes of silicone ear tips that conform to different ear shapes. The device costs $249. And shares of Fitbit soared on Monday. Reuters reports that Google has made a takeover offer for the maker of wearable and wireless-enabled fitness devices. There is no certainty that a deal will happen. Neither Google nor Fitbit is commenting. And in Northern California, wildfires are blazing out of control. Almost 200,000 people have been forced to leave their homes. At the same time, PG&E is slowly restoring power after the biggest deliberate blackout ever. It's about 2.7 million people have had their electricity shut off. The blackout was aimed at keeping power lines from starting more fires. And shares of AT&T are rising. The company won praise from activist investor Elliott Management for its new 3-year plan. The telecom promised to do much of what Elliott had pressed for. That includes a pledge to separate its chairman and CEO roles. That will happen after Randall Stephenson departs sometime after 2020. He holds both positions. And then Spotify shares did surge the most since its IPO in April of 2018. That is after the company beat estimates on subscriber growth this quarter with an additional 5 million users. Spotify now has a base of 113 premium subscribers. Shares rose as much as 12% at one point on Monday. The Sweden-based music streaming giant also posted its second profit since going public. It is a sign that it is keeping rivals like Apple and Amazon in check. And now joining me here, it is Ed Ludlow. I want to talk about Apple earnings. We did it at the top of the show. What happened? What have we learned on the call so far?
Intense focus on cloud. So, the biggest driver for Alphabet and Google is its core business, advertising. That's been the obsession for quarter and quarter and quarter. And that's because for such a long time, Google has seen 20% annual revenue growth in advertising. But that business is kind of slowing down. So a lot of the talk from Ruth Porat, who you spoke to earlier, and from CEO Sundar Pichai has been about the cloud. They've been investing really heavily. Headcount is up to almost 6,500 in that business, a really significant increase. They've been broadening the customer base there. And what's really interesting, if you look at the breakdown of revenue, yes, okay, advertising dominates, but that little number, that little bar that refers to other, which includes cloud, which include hardware, is rising too. They were talking about Pixel 3, the cheaper handset. That's improving. So they're looking to the future when it comes to future revenues for Alphabet.
All things Alphabet and Google. That was Ed Ludlow. And coming up, the space race, it hits Wall Street. We do hear from Richard Branson. He's next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. Let's focus back on the FANG. So Alphabet shares fell in late trading after reporting third quarter earnings. The results were largely impacted by its heavy investment in Google's cloud computing business, which is trying to catch up with rivals like Amazon and Microsoft. Later this week, we get numbers from Apple and Facebook. They report quarterly earnings on Wednesday. Joining me to discuss it all, it is back with Bloomberg's Ed Ludlow. Walk me through Alphabet and Google. What do we know?
So cloud is the future, and they're making that really clear. It's their fastest growing business. Remember back in Q2, we had Sundar saying that we expect this to be an $8 billion annual business coming up. They're competing against the likes of Amazon's AWS and Microsoft. And just to give some kind of context around that number, $8 billion is around a quarter of what AWS makes for Amazon. But it's still growth potential. And it's interesting because they're moving away from this reliance on core advertising business, right? And to date, that's been a really incredible engine for growth. They've had annual growth of 20% on revenue for quite a long time.
Well, and I want to pull up a chart here that I'm showing for our audience on the Bloomberg terminal, really highlighting the strength in the white bars that is the revenue relative to everything else. They are so dependent on ad revenue.
They have been. So lots of successive quarters of 20% plus annual growth. That might be slowing down a bit. Remember back in the first quarter, there was a miss on revenue. That had some concern really for investors about the future of the advertising business. Second quarter was better. Now we're here at third quarter, and on the call, there's just so much talk about the cloud, about how much they're investing. They really put a lot of money into this business unit. They're hiring like crazy across it. And for them, really, they feel like they can be competitive against Amazon and Microsoft. I heard Jitendra from Bloomberg Intelligence talking about that earlier. But there are other areas as well. They mentioned Pixel 3, this cheaper handset compared to what the rest of the market's offering, and they see a lot of potential in that too.
Ed, on Bloomberg Technology, we like to push it forward. We go to Wednesday, where it's Apple. Are all eyes on how those first early numbers from the iPhone 11 sales are going?
Yeah, so this quarter will include those first shipments. The kind of consensus estimate is for around 42 million units, which is actually a sharp decrease from the same quarter last year. But remember, this is the quarter before holiday season, fiscal fourth quarter for Apple, but the quarter before the holiday season. We talked about it a lot. Apple's reliance on the iPhone and handsets, moving away from that towards a services business. But if you look at how the street views this, there have been 10 changes, 10 calls on the stock this month alone. And part of that is optimism about foot traffic through Apple's US stores. We could see a surprise there, even though the estimate is so low. And then beyond that, definitely keep an eye on services. You'll remember that they bundled in Apple TV Plus with the purchase of a handset to try and draw those people in. It's as much about getting existing iPhone users to use more products and services more of the time as it is about getting new handsets to new customers. So that's kind of where we'll be looking when they report earnings on Wednesday.
Well, Ed will be following all of those earnings for us. Can't thank you enough. Ed Ludlow, thanks for joining. Now, billionaire Richard Branson's Virgin Galactic Holdings became the first publicly traded space tourism business on Monday. The listing was carried out through a merger with a shell investment company that was already trading. Virgin Galactic has been running for 15 years without yet achieving a first commercial launch. Nonetheless, Virgin Group founder Richard Branson and CEO George Whitesides shared their enthusiasm of their public trading debut on Bloomberg News earlier Monday.
You know, what's exciting is that we've been flight testing these vehicles for now nearly 10 years, and we believe that we have an architecture that is extremely reliable and also has aspects that are very suited to the customer experience. For example, taking off from a runway, landing on a runway. Those are things that I think will have a very nice smooth start and ending to the customer experience. And then our rocket motor is actually the simplest and thus safest, we think, human-rated rocket motor for our class of rocketry. So for all these reasons, we feel really good about the system.
And the rocket can turn off, which at a second's notice, which is the I suspect the biggest key to the safety.
George, just coming back to the issue of, look, I understand why celestial travel gets all the buzz. It's very exciting and new, but surely there are good commercial applications for this here on Earth. How much of the company will be focused on that, providing, as it were, like hypersonic travel between cities?
Well, the exciting thing right now is obviously the commercial space is a massive business right now. So it's, over $375 billion annually now, growing to an expected total of around $1.5 trillion. And so this is really, as Richard says, the first time that people can invest in a pure play commercial spaceflight company, which is incredible. Now, what are we going to be doing? We're going to be focused, first of all, on building out this terrific high margin business with human spaceflight customers operating from Spaceport America in New Mexico. But what's exciting is that we can build towards even bigger markets, such as hypersonic point-to-point travel, which is a $300 billion per year TAM, which is very exciting. So we have a very exciting near-term and far-term future here.
And Richard, you've been in this race for a long time, obviously now competing against some other big names, Jeff Bezos and Elon Musk among them. What's the first mover advantage here?
Well, I think we have the advantage of having already put people into space, and we've made 5 new astronauts. There haven't been any others made on American soil since 2009. So we have a tested and tried system that is performing well, and we're building using the money that we've raised today. We can build a lot more spaceships and motherships and a lot more rockets, and we can build the numbers of people who are able to go into space.
And what does a typical customer for this business look like?
Oh, sorry.
No, you.
Well, we just have a wide range. There's some folks who are really inspired by the Apollo program or space in general. There are other people who, want to do the next big adventure. There are some people who are interested in the perspective change that they'll get from going up into space that people talk about. And then there's some people, honestly, who just love the Virgin brand and Richard, and we welcome them all. People do it for different kinds of reasons, and we think that there's just a tremendously big market out there. You go to talk to people, and 3/4, 8 out of 10 people actually want to go to space if they can afford it. So there's a huge latent market.
But talk to me about that, because the price point is going to be important here.
Yeah, no, for sure. I mean, the price point initially is, a fair amount of money. But keep in mind, the only other way to go to space right now is to buy a ticket with the Russians, and they're charging about $85 million to NASA. So it's a dramatic price decrease. Now, obviously, long term, our hope is to go down. In the near term, actually, the price will probably go up a bit because we realize that it's actually underpriced. But long term, I think, Richard, and my vision is to bring that cost down so that more and more people can experience the wonder and joy of human spaceflight.
Richard, last question for you. As I say, you've been at this game for a while. Something that's going on in our home country, Brexit, right now seems to be dragging on and on and on as well. What do you think is going to happen first? Will you get tourists into space, or will the UK successfully leave the European Union?
I very much hope that we'll have tourists in space many years before we even consider leaving the European Union. I think my thoughts have been well publicized. I think it's the saddest thing that's ever happened to Britain and Europe, and I'm just hoping that another referendum will be allowed, because if you look at all the polls, it shows that I think people have realized that they were misled, and they would vote overwhelmingly to stay as part of the European Union.
That was Virgin Group founder Richard Branson and Virgin Galactic CEO George Whiteside speaking to Bloomberg's Ed Hammond. And yes, Branson was donning Virgin's, quote, spaceware system. And coming up, we are checking in on Envoy's using tech to transform greeting company offices. Now they want to be in on the smart office revolution. That's next. This is Bloomberg. And now to our work shifting series, where we look at how technology is changing the nature of workforces across the globe. Our next guest began his tech career at Google at the ripe old age of 18. He then went to Twitter before deciding to start his own company to try to transform office spaces. San Francisco-based Envoy is doing that by using office check-in systems in 13,000 lobbies across 70 different countries. And you can find its use at companies like American Express, Slack, Yelp, Spotify, Nike, and more. So for more, let's head to Detroit, where Envoy CEO Larry Gadea is standing by. Larry, great to have you. Quick, give me more of an update about what your company is doing.
Hey, thanks so much. So yeah, we're trying to make workplaces work better. There's a ton of different mundane things that people kind of put up with on a day-to-day basis, and what we want to do is really kind of rethink all of this. And we started in a very simple visitor sign-in product that people saw everywhere. They were excited about it, and they brought it to their own companies, and that's how we got to the over 13,000 companies that are using it today. So pretty excited about this, and now we're taking on the rest of the office. So lots of different products, lots of different areas. Good times.
And I want to talk about that different office, because we know that you have nailed the check-in process. What are you doing to make the office a smart workplace?
Yeah, well, so think about this. Like in your home, you kind of had this old thermostat, which kind of got transformed into kind of something beautiful, much like the Nest thermostat. And it just kept on going. It got connected. It would measure when you're home, when you're not, and all the different things that would make your office or like your home a really great place is now it's interconnected. And we want to do that for the office. We want people to come into the office, know, like a visitor comes in, they sign in, they would go into a meeting room. In that meeting room, it welcomes them. Maybe it will, like if you're in the meeting room, then you can extend that time as well. Like the future is a place where you're just not worried about the day-to-day mundane stuff. And that's some of the things that we're working on to make it much better.
And with all of this, though, comes heightened scrutiny over data. What are you doing to keep data safe?
Yeah, well, let's think about kind of where sign-in was before this. People would go into somebody's office, and there's literally a logbook that would just be on that front desk, and you could just see everybody before you. Our company, what we literally do is we're trying to bring people away from that. We're trying to make it better. So it's now on an iPad. You would sign in. It's one person at a time, and that way you don't see everybody else's information, including like sometimes driver's license numbers. So all of this stuff is now centrally stored, and you being in a facility, you have access as a facilities director. You would have access to all of your facilities around the world. So if you have 100 offices, you can just see all of the sign-in information from 100 different offices that your company would own. So it's a very great way of providing a lot of power for our bigger enterprises. And that's just the one product. When you think about everything together, it's just that added convenience and power really does bring a lot of things that you can do.
You know, a few weeks ago, I interviewed a gentleman, and he had an all-remote workforce. How much of a headwind is that to your business as we increasingly move to being more remote?
That's a great question. I think just generally, people are going to want to see and work with other people. We have workplaces because it's a lot easier to collaborate a lot of the time. Now, not every job and not all the time, that's true. But even now the census data is showing maybe like 3 or 4% of people work from home. So it's still a pretty small percent. I don't see that changing anytime soon, just because inherently people want to be with people, and we're just going to make that area even better for them.
Larry Gadea, CEO of Envoy, thank you for joining. And still ahead, Facebook fallout. Employees at the social network are not happy about Facebook's decision to let politicians lie on the social network. That's next. This is Bloomberg. The price of Bitcoin once again flirted with the $10,000 mark over the weekend. It might have China to thank for that. This comes after the Chinese president Xi Jinping called to keep China at, quote, the very forefront of blockchain technology last week. And then a senior Chinese finance official called for, quote, special attention to be paid to blockchain. To discuss that and help us kick off San Francisco Blockchain Week, it's Galen Danziger. He is the CTO of Mousebelt. It is a blockchain accelerator and ecosystem. So you're in the accelerator, you're in the midst of it. And what I love is that you've talked about how the VC crypto world, right now, that fundraising environment is broken. Why?
So we think that a lot of projects were able to raise money very easily, and the incentives weren't correct for them to deliver on those. Like, it was projects needed something beyond just investment in. They need extra help from their investors and support to actually push them to deliver a product in the space.
Another thing that was really interesting is you said that any startup can succeed if it's given the right tools and you have a backer who comes in and can see the project through. How much of that, though, shouldn't be? Not every startup should be successful. Why do you think that if a backer can come in and see a company through, that alone would help it be successful?
So we think if a startup has a really strong idea, but is just missing a few of the things to help get it to that next phase, get the product to market or get it built, that's somewhere where an investor or a team can come in to help them out and push them to that phase.
And in the introduction, we talked about how volatile Bitcoin has been, wild swings. As you take a look across the crypto VC landscape, does that volatility help or hurt?
So in terms, for projects that have raised money and used Bitcoin for accounting, volatility definitely does hurt it. Though as the market has taken a dip, it has also helped wean out projects that maybe there wasn't enough of something to them.
I want to get your take on what Zuckerberg had said about China with regards to his Libra cryptocurrency. Take a listen. We have a soundbite from Mr. Zuckerberg.
As soon as we put out this white paper on Libra, what we saw was, in China especially, they immediately kicked off this public-private partnership with some of their biggest companies in order to race to try to build a system like this quickly, a digital renminbi that they could use as part of their Belt and Road initiative, their kind of foreign and economic policy to grow influence throughout Asia and Africa and other areas.
He's really highlighting that if we don't act, China will. Is that a real threat?
Absolutely. I think the U.S. has failed to supply sensible regulation for projects in this space to build on. If you compare that to other jurisdictions, projects actually collaborate with legislators to form laws and regulatory sandboxes. Here, they end up looking over their shoulder, trying to figure out what the laws are and if they'll be subject to them in the future.
What does smart regulation around cryptocurrencies look like?
So I think exactly something like a regulatory sandbox or an open discussion about what rules should be and what things should be enforced. Currently in the US, it is not that.
Very interesting. That was Galen Danziger of Mousebelt. Thanks for joining. Now, Facebook employees are speaking out over the company's political ads policy. A letter from employees to CEO Mark Zuckerberg obtained by the New York Times reads, quote, misinformation affects us all. Our current policies on fact-checking people in political office or those running for office are a threat to what Facebook stands for. We strongly object to this policy as it stands. It doesn't protect voices, but instead allows politicians to weaponize our platform by targeting people who believe that content posted by political figures is trustworthy. For more, I bring in Bloomberg Technology's Sarah Fryer, who covers Facebook. Sarah, what do you make of that statement?
I think it's really hitting at Zuckerberg in an interesting way, because Zuckerberg is talking about, we saw him at Georgetown last week, we saw him in the halls of Congress saying that it's all about free speech, that allowing politicians to speak on Facebook no matter what they say is important for the marketplace of ideas, employees are hitting back and saying it's really not about censorship at all. It's about the way that Facebook itself amplifies certain ideas, allows people to pay to have their message known, allows people to target very specifically who their ads can reach. And when those ads reach a very small audience of people who are likely to be receptive to them, there really isn't a marketplace of ideas checking the politicians on those comments. So I think it was a very smart internal look at the ways that Facebook not just allows speech, but amplifies it. And Facebook does not have this happen at its company. It's a very transparent, open workplace where people are constantly talking about all the issues that affect employees. I've never heard of a letter to executives with signatories like this. It is really a big deal to see them say something so formal.
So, Sarah, do you assume that Facebook coming out and saying, well, we'll review the way the ads are presented, so it's very clear if this is a political ad or not, does that not go far enough?
Well, it doesn't address the complaints that employees have here. Certainly, the way the ads are designed and labeled is one of their top complaints, but they also want politicians to be treated the same way as others on Facebook. If you are any other advertiser on Facebook, you cannot lie in your ads and it just gets taken down. But Facebook does not want to be in the position of having to decide if something is true, and they also say that they shouldn't have that power. At the same time, by stepping back and not taking any action on those ads, they are allowing lies to spread and are okay with it. So there has to be some middle ground. I don't think that based on the employees pushing back, but also we've seen Elizabeth Warren, Joe Biden, others pushing back at Facebook. They're going to have to make some sort of move on this. It's just unclear what.
And Sarah, amidst all of this, all the antitrust scrutiny, the data privacy scrutiny around Facebook, they're coming out with a preventive healthcare update, if you will, that reminds you to maybe get a blood pressure test or not. Why is Facebook coming into the healthcare sector?
Facebook wants to, in whatever Facebook does, they want Facebook to be more useful to the people who are using its product, not just for connecting with friends and family, but also for getting the news, for getting to sell their couches on Facebook Marketplace, for messaging, and now for health. I think this is just another area they could potentially move into to give you another reason to check your Facebook. So you should think about it that way. I mean, I think that health providers are very important to Facebook in that they're big advertisers, but really this is about trying to do something for users that kind of aligns with what they would need in their lives if Facebook is the intranet for people across a lot of the world.
And Sarah, quickly here, the company says that it will protect the data that you enter. Is that trustworthy?
It's just always going to be bad optics when Facebook announces something that probes deeper into our personal lives, given all the privacy scandals of the past. It doesn't really matter what they say about how data will be used. Their past history is going to cause some consternation and concern among their users.
Bloomberg's Sarah Fryer, thank you, as always, for joining. And finally, word late Monday, short video app TikTok owner ByteDance is mulling a Hong Kong IPO as soon as the first quarter. That is according to the Financial Times. TikTok's valuation has considered to have soared past that of Baidu. And also late on Monday, we've learned that Tesla CEO Elon Musk's defamation case will head to trial in Los Angeles in December. You may recall that Musk asked a judge to throw out a defamation lawsuit by the British cave diver the Tesla founder called a pedophile. Musk's lawyers say the Twitter attack on Vernon Unsworth was simply part of a schoolyard spat on social media. Again, Musk's defamation case will head to trial in LA in December. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology. And be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.